The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are. I mean, if you buy things for far below what they're worth, and you buy a group of them, you basically don't lose money.
Warren Buffett is probably the most successful investor of our time. And if you've just started investing or you're on your investment journey, it is very likely that you've come across a ton of YouTube videos of Warren Buffett speaking, offering words of wisdom to help retail investors, people like you and me, be successful as investors too. But what if I told you that there is a way that you could copy the exact way Warren Buffett invests in your own portfolio? That's what I'm going to show you in today's video using eToro. But before we jump into the demo, let's have a little chat about Warren Buffett, get some background, and delve a little bit deeper into the investment philosophy that has made him so successful. Born in 1930, Buffett showed an early interest in business and investing, and at just 11 years old, he bought his first stock. He studied under Benjamin Graham at Columbia University, learning the principles of value investing, which has subsequently seen him amass a fortune. Over the past 20 years, his personal wealth has substantially grown. In 2004, he was worth approximately $42 billion. By 2024, his net worth had grown to around $118 billion. Now, Warren Buffett's investment strategy is pretty simple at its core. He has and will always be a value investor, and we'll talk about what that means in a moment. But there are some key principles that sit under this idea of value investing, which I'm going to share with you. There are actually three that I'm going to go through in this video. And I think it's really important to know that when you think about Warren Buffett, he's always kept with the same investment philosophy all the way through his career. I mean, from when he first started all the way till now, and he's probably going to stick to it until he dies. And his investment approach has been the sole reason why we've seen his net worth bloom and blow up so much in the past couple of decades. And it's certainly the reason why he's been able to deliver such phenomenal returns for investors in Berkshire Hathaway. But what does it all mean? What are the ideas that sit behind it? Well, let's start with the first, the most obvious one first: value investing. Warren Buffett has always been notorious for looking for a deal on the market, looking for companies that are under market value. And there is a reason why he does this. And I'm always conscious that when we talk about this from an investment point of view, we talk about, undervalued stocks or overvalued stocks. It can always seem very, very complicated, but at the core, it's very simple. It's simple business economics. The idea that if you buy something at a lower price and it's a good product, if the price goes up because of demand and supply, that equation, you have a chance of actually selling it for a higher amount. It sounds so simple when you put it that way, but that's essentially what value investing is all about. Now, there are a number of ways in which you can establish whether a company is overvalued or undervalued. I'm going to give you one example right now, or one formula that you can use. It's called the price to earnings equation or formula. And this is how it works. And I'll pop it on the screen right here. Now, a price to earnings ratio essentially compares a company's stock price to its earnings per share. And this will be information that you'll be able to find on their company records, essentially. But this is how the formula works. So you will take their share price. Let's just say in this example is company XYZ and the share price is £100. And let's just say their earnings per share is £5. So you divide 100 by 5, that gives you 20. Now, the way that you would establish whether or not this is an undervalued or overvalued company is you would look at competitors, similar companies that do similar things, sell similar products, services, or maybe of a similar size. And you would run the same equation with those companies as well. You take their share price and their earnings per share. And let's just say you found a number of them and their earnings per share came out at 25. You would easily be able to establish that whilst those companies are very, very similar, their price to earnings ratio is 25, ours is 20. That would tell you that this company is undervalued. Another principle that Warren Buffett really sticks by is the fact that he looks at long-term prospects and he has a long-term focus. And this is really important when you begin to invest, because looking at companies that provide the products or the services that we need as people to be able to survive is really what it's all about. So the question that Warren often asks is, okay, so what companies are going to be around now that in 10, 20 years time will offer really good opportunity for growth and therefore a return on my investment. A prime example of this would be the likes of Apple, for example. But to just bring this into context, if you had invested £10,000 into Apple 20 years ago, today, with their share price being over $200, that £10,000 would be worth. So the long-term view has a huge impact and really matters when you're investing. And that is something that Warren really, really focuses on. These are companies that have strong fundamentals, so they have really good and consistent earnings. They have unique products and services. They have an edge over their competition. There may even be a really high barrier to entry into the industry that they dominate. An example for this might be the likes of Meta. In this social media age, they are pretty much king. You could argue that maybe TikTok has come in and taken market share over the past, I would say, 4 to 5 years. But Meta as a company has really good earnings. They have really good fundamentals. They have a unique product and a unique service with a very, very high barrier to entry. They have a strong brand presence as well. And for Warren Buffett, these are all big ticks in a box when he's looking at companies. So he does not take a gamble. He doesn't take uneducated guesses. He really makes sure that he sticks to his fundamental criteria, and that is a company undervalued or overvalued? Do they have really good presence in the market, a competitive edge? Are they a high quality company? And he does this despite the fact that oftentimes the wider market can be caught in a speculative bubble. And if you ask me, I think that that's probably one of his most admirable traits of all in how he invests, generally speaking, because he does not get caught up in the hype. And if his performance figures are anything to show for it, I would say it served him well today. On eToro, what you need to do is you need to search for Warren Buffett -CF, okay? So that right there is what you actually need to search for. And it's going to bring you to this page. Now, there are 4 tabs. You've got overview, you've got stats, you've got portfolio, you've also got chart here. Let's start with overview first. Now, this overview is designed to give you an idea of just the general performance of this portfolio over the course of time. Now, because it's Warren Buffett doesn't mean that there are no negative years. There are negative years, as you can see in the graph right here. So in 2015, a negative 7.7%, so there was a loss there. In 2018, negative 14.43%. And in 2022, negative 17.55%. So those are 3 negative years in the 10-year span that is, put out here on this graph. So 7 good years. And what we know is, from looking at the data here, the return year to date right now is 16.2. The return over the last 2 years is 17.6. And it talks about profitable weeks. So how many profitable weeks in terms of a percentage? There have been 53.7% profitable weeks. Now, it is important to note this. The risk score, and this is really designed to tell you what is the risk of copying Warren Buffett. Now, this scores out of a 10. So when you score 4 out of 10, you can easily say and come to the conclusion that this is a relatively low risk portfolio compared to maybe some others that you might find on eToro, where they might be like a 7 or an 8 or a 9. So this is a 4, which means that potentially, as it says here, the volatility is going to be a lot less, about 2.7% volatility, but it is a lower risk portfolio. So if you are investing and you don't want to go gun-ho, take stupid risk, this could be a really, really good fit for you. So worthwhile checking that out. You also have, when you scroll down here, some really good stuff from eToro. You've got their monthly report, their smart portfolio report. And on this side right here, you're also going to find that there are 2,800 copies of this portfolio. There's over 500,000 people actually following this portfolio right now. So that's the overview. Now let's have a look at the stats. Now the stats over here, as you can see, this is giving you the asset allocation of the portfolio. So these are the various companies, and we'll dive into the portfolio allocation in a moment. But if you look at the top companies, so the top company with 47.91% is Apple, right? So big, massive company that produces good products and services, obviously, the largest holder here. Then you've also got other companies in here as well. That's Coca-Cola, KO. So Coca-Cola is this green slither right here, 6.73%. It is really important to make sure you kind of have a view of that, and we'll look at all these other companies when we get into portfolio. But it's also worthwhile just noting here that this copy portfolio is based on public SEC filings of Berkshire Hathaway provided by TipRank. So what happens is when Warren Buffett is either trading, shifted around his portfolio, he has to make a filing to the SEC, and that's how the portfolio people who are managing this know what he has bought, what he has sold, what might have changed. There might be a little bit of a lag, and there will be a bit of a lag in terms of what he does real time and when it translates to eToro, but you're still getting the ability to copy his moves at any given time. Now, it gives you another snapshot of the performance here, just in terms of a monthly breakdown of how it's performing. So for example, in January, it was minus 1.36%. However, in July, it's up 5.9. In June, it was up 3.52. In May, it was up 7.11%. Now, it is important to know that obviously this is investing, so things do go up and down. And whilst the volatility for this portfolio might be lower than maybe some high risk ones, it doesn't mean that you're not going to have some red months in some times. Let's actually go and have a look at the portfolio. So 25, as we've already said, Apple has the largest share. You've got Ali Financial here, you've got Amazon, you've got Aon, you've got American Express, you've got Bank of America, Citigroup, Chubb Corp. These are all companies that you've probably heard of in some way, shape or form. And that's one of the key things that I think is really important to note about Warren Buffett. As we've already said, he likes to look at companies that have, you know, a really, really good track record. So they're high quality companies, and he's looking for value in his investments. He's not looking to speculate. So most of these companies, if not all of them, are household names in some way, shape or form. You've got Visa there, you've got VeriSign here, you've got Snowflake, you've got Occidental. You know, this is a petroleum company, right? MasterCard, all companies that you could argue are very well known worldwide, that have products and services that they sell into the market and are good at doing so. The last tab that you can see here, it's basically just a chart of performance. And if you go all the way back to 2024, so again, zooming out to 10 years, you can see how this portfolio has basically grown. So if you look at what was the stock point right here on the 31st of December 2023, it was at just over 10,000. And now it's all the way up to, well, that's that 11,473. So it gives you a nice visual kind of look at how it's performing in terms of the performance trajectory, and the trajectory for this, it is an upward trend, which is a good thing. Now I'm just going to go back on to overview here. Now, investing in this is really, really simple. I don't actually have any more money allocated in my account right now. Most of my money is invested. But if you wanted to invest, all you would need to do is click this button right here, make sure you deposit your money. A stop loss is automatically added to this. Once you've deposited, you can then literally just copy this portfolio. And I think if you are the kind of person where you want to invest and you want to copy someone like Warren Buffett, but you didn't want to necessarily have to continuously monitor this on your own, any changes that happen to this portfolio will be reflected in your portfolio automatically because you're copying what's going on. But being able to do this, if you're a first-time investor, or maybe you just want to see what Warren Buffett is doing and follow his trend, this could be really, really good because it means that you can just do this on a hands-off basis as well. Before we actually kind of finish this off, one thing I do want to point out is I do want to point out the eToro Academy. Now, if you are kind of new, I would strongly recommend that you have a look at the Academy here, because when you click on this, there are all manner of courses available to you to help you kind of better understand how investing actually works. So for example, if you click on this one right here, which is all about investing, there are a number of courses in here. So what's the difference between investing and trading? Because they are two fundamentally different things, and people often confuse trading with investing. And when you click on this, it takes you through. There's a video right there. You've got some really good text material as well. So if you'd rather read than watch, you're able to do that. It really gives you a good insight so that you can have the foundations that you need to be able to be successful when you invest. So if you are kind of just starting out, you're learning, or you just want to improve your knowledge, if I just go back very, very quickly right here, because they've got such a wide range of topics. Let me just go back one actually. you might decide, well, actually, you want to delve into trading, and you've got all of the material that you would need to help you kind of give yourself a really good foundation here in the academy. So there we go. That's a quick demo of how to invest like Warren Buffett, essentially copying his investment strategy. There is a link down below. eToro are giving away a free ebook upon sign up. It doesn't cost you anything. You can also check out the academy as well. But let me know what you think in the comment section down below. Would you copy Warren Buffett's investment strategy? Or do you feel confident enough to be able to just come up with a strategy of your own? That's the real question. I think for people who are maybe a little bit more advanced, you may have different interests and may want to take a different path. But for maybe novice or people who aren't quite as experienced, copying a well-known investor like Warren Buffett might be really, really attractive. I'd love to know what you think. Leave a comment down below in the comment section. And like I said, the link down below can help you get to where you need to be able to take advantage of this. If you haven't already subscribed, please consider subscribing. If you have enjoyed this video, make sure you smash that like button. Until the next one, catch you later.